All right, let's talk about RPM International. Their latest earnings report was, well, a real head scratcher. What looked like a clear miss on paper turned into something completely different by the end of the day. So we're going to unpack this wild turnaround story. So here's the big mystery, right? How on earth does a company miss its earnings and then see its stock swing a full 10 points in a single day? I mean, it opened way down. Everyone was selling. But by the close, totally different story. Something big must have happened on that earnings call to cause such a huge reversal. And that's exactly what we're going to get into. Okay, just look at this roller coaster. Seriously, the stock was sitting pretty at around 105 bucks. Then bam, the earnings hit and it gets hammered down to 97.5. We're talking a 7% drop. Ouch. But then it just catches fire and stages this incredible rally, closing up 3% near 108. That's a 10-point swing from the bottom to the top. It's like watching two completely different days for one stock, all packed into just a few hours. All right, first up, the headline miss. Let's break down why the market hit the panic button right away. So let's look at the numbers that caused all the trouble. Adjusted earnings per share. They were hoping for about $1.41. What they got, $1.20. That's a big miss, 21 cents short. And revenue was a little light too, missing by about 20 million. You know, a miss on both earnings and revenue, that's never what you want to see. And to put that earnings miss into perspective, we're not talking about a small slip up here. This wasn't just a penny or two off the mark. It was a nearly 15% shortfall from what Wall Street expected. For a company in this sector, that is a huge deal. So yeah, no surprise that was the main reason the stock got crushed right out of the gate. Okay, so that was the what. Now for the why. Let's get into management side of the story and how they explained this shortfall. So on the call, management laid out a whole list of headwinds. They talked about a government shutdown messing with their big construction projects. They mentioned that the do-it-yourself crowd, regular consumers, just weren't spending as much. Things apparently slowed down a lot in October and November. And to top it all off, they had some internal growing pains with facility consolidations that were squeezing their margin. So the call started out sounding a bit defensive, explaining all the problems, but then everything changed. This is the pivot. Management completely flipped the script from talking about past issues to announcing a huge, concrete plan for the future. And this is what turned the entire day around. And here it is, the number that stopped the bleeding. $100 million. That's the headline. They announced a brand new plan to slash their overhead costs, what they call SG&A, by $100 million a year. Let me tell you, when you drop a number like that on an earnings call, people sit up and pay attention instantly. And the key thing here is they didn't just throw out a big number and say, trust us. No, they gave a detailed timeline. They said, look, we're going to see about $5 million in savings next quarter, then another $20 million the quarter after that, and the rest of it, the big $75 million chunk, will come in fiscal 2027. This wasn't a vague promise. It was a clear, believable roadmap to making more money. And the market absolutely loved to see it. And you could really hear the confidence in the CEO's voice. Frank Sullivan basically said, hey, the market's a bit tough right now, so we're moving fast to get our costs in line. It didn't sound like they were panicking at all. It sounded like they were in control, making smart, decisive moves. After a rough quarter, that's precisely the kind of message that gives investors a reason to start buying again. So what's the next call? After a day like that, it's pretty clear the market is split. So let's break down the bull case versus the bear case for RPM going forward. Okay, so the bull case is pretty simple, right? You've got this massive $100 million cost-cutting plan. That's a huge positive. Their forward guidance was solid too. And get this, during the Q&A, they let it slip that December sales were actually up more than 12%. So that's the good news. But the bears will tell you that all those bigger economic problems, they haven't disappeared. And pulling off a $100 million savings plan, that's easier said than done. So it's really a classic showdown. Can the company's own improvements outweigh the tough environment out there? So, before I give you our final take, let's just quickly be clear on what market perform means. It's not a buy and it's not a sell. It basically means we think the stock will probably do about as well as the overall market or similar companies over the next year or so. The risks and rewards are pretty balanced. And with that, our rating on RPM is market perform. Here's why. That $100 million plan puts a really solid floor under the stock's valuation. It's a clear positive. But at the same time, the shaky economy and the real risk that they might not pull off the plan perfectly, well, that's probably going to cap how high the stock can go for now. So what's a potential trade idea here? Well, the main thesis is that this stock is probably going to keep swinging around. This battle between the company's plan and the weak economy isn't over. So one way to play that is to bet on the volatility itself. You could look at a strategy using long-dated options, something like a straddle or a strangle. Basically, you're betting the stock is going to make a big move. Up or down, you don't really care which. It's a way to try and profit from the uncertainty as this turnaround story plays out over the next few earnings reports.
And that's the story of RPM's wild earnings day. A big miss that turned into a big win, all thanks to one massive announcement. And of course, just a reminder, this is not financial advice.